back and then just putting different labels on everything. It was
conceptual
kind of crazy.
art. I love it.
I mean, we're so fooled. All right. Not fooled, though, by Jay Powell. I think he was very direct, laid it out once again for everyone. He spoke. He calmed us down maybe for a little bit. The market's been back and forth. But let's just point out, we had some protesters at the event who were calmed down, removed. I don't know if we have some video for the folks on YouTube and Bloomberg Originals. There was a delayed start to that event with Jay Powell because of these climate change protesters. He did talk with David Weston, speaking with the chair of the Federal Reserve. Again, prepared remarks. We did see markets react. We want to get into it because we have seen some interesting market reaction against a backdrop of, once again, another strong jobs report. There it is for those on YouTube and Bloomberg Originals. Jay Powell actually removed as they reacted to those protesters. They're standing up. Sorry for everybody on radio, but basically Jay Powell taken out. There was a little bit of a pause in the event. The protesters were removed, and then Jay Powell and David Weston were back for the remarks and the questions. Let's get, though, into what we really care about, Tim, and that is market reaction, what it all means.
Well, we got Bloomberg News rates reporter Michael McKenzie in our Bloomberg Interactive Brokers studio. Also joining us for the equity side, Alexandra Semenova, Bloomberg News equities reporter. She joins us on Zoom here in New York City. Michael, I want to start with you and talk a little bit about rates because Powell making the case that, yields moving higher could actually do some of the Fed's job for it.
Yes, I mean, he's echoing what we've heard from other Fed speakers recently, and I think that's the best case scenario here. That'll help slow the economy, gets inflation back down to target, and over time we get that sort of much heralded, fabled soft landing. I think the risk with Powell's comments today, what really stood out to me was when he said, we just have to let the long end play out. And
what does that mean?
Well, he's essentially hoping that things are going to calm down, and I think he's injected something here that you've got a bond market that's looking at a third straight year of losses. We're getting towards the November refunding announcement where Treasury is expected to increase the size of future borrowing needs, not just for November, but also for the upcoming refundings in February.
Supply.
Yeah, lots of supply coming. He talked about the term premium is what explains why rates have sold off, even though you ask anyone on Wall Street, they can't really explain what this term premium is. They can't really put a number on it because it's essentially this idea that investors are demanding a higher rate of compensation to own longer dated debt.
Which makes sense.
It makes perfect sense.
That's like textbook economics.
Makes perfect sense. But I think we're getting towards the end of the year where it's been a bad year for investors. The Fed chair says we just have to let this play out. You are opening the door to instability. You are opening the door to the bond market beginning to unravel. And this is something that Jean Bovine from BlackRock this morning pointed out on Bloomberg Television. The Fed should be worried about this kind of outcome.
When you say unravel, what does that mean?
Just a spike in yields. And don't forget the Bank of Japan is in play now as well. The increasing speculation that the Bank of Japan will move away from negative interest rate policy, will have to upgrade its future inflation forecasts. And so you're getting into this environment where the global economy is saying, the US economy is doing well, but global central banks are still tightening. And if the Bank of Japan finally starts to push a little bit further in that direction, this is a nasty cocktail for a bond market that's had another tough year, particularly in the long end. You only have to look at the TLT ETF down so much. This has been a very painful year.
So then we go from 5% perhaps that has peaked to maybe 6%.
Well, yeah, 5.25 in the long end, and the 30-year yield jumped more than 10 basis points today after Powell spoke. 10 years knocking on the door at 5%. Once you break these big levels, it can keep going.
So let's connect the dots with the equity side of things. Alexandra, come on in on this conversation. We definitely saw a reaction initially, a rally in equities. I think there was expectations that maybe things weren't going to be as problematic for the equity side of things. And then there certainly was a rethink as these, Powell reminded us that rates are going to stay higher for longer and maybe even go higher. Talk to us about the trade.
Yeah, what we're seeing today, this volatility in equity markets, is essentially a really pronounced episode of kind of what we've seen for the last couple of months. And it's being driven by the fact that investors can't seem to figure out whether they're optimistic about a potential end to the Fed's rate hiking cycle or concerned about the prospect that rates will stay higher for longer, the potential economic toll of that, the toll on corporate growth of that. And what I'm hearing from a lot of portfolio managers and strategists is that it's not necessarily that they're concerned about rates staying higher, if they were to get to a level that's elevated and stay there, equities can still thrive in that environment. But it's really the volatility that is concerning to them. And Fed Chair Powell's messaging today certainly didn't alleviate that. He continues to reflect mixed messaging, the same mixed messaging that we've gotten from economic data. He's asserted that, while the Fed is being more cautious in whether or not it'll hike again, but it is still committed to bringing inflation.
I want to jump in because I do think
2%.
how tough higher rates are going to be on consumers. I know Elon Musk kind of was like wah, wah, wah on the call last night, but talked about the impact of higher rates in his world. But I do think, Tim, we talk about it all the time. Higher mortgage rates, like the impact that is having on mortgage applications. I mean, it's definitely slowing down the housing market.
Slowed down is one way to describe it. A standstill is another way to describe it. So it raises the question, Michael. You talk about, 10 to 10 year creeping up from 5 to 6, perhaps. You said things could keep moving higher. What effect does that have on the consumer?
It's going to tighten things. I mean, the question really is, it's just how long does it take to play out?
Well, but Powell did make that point, Michael, that there are a lot of Americans right now who are sitting on fixed rate mortgages that are at a very low rate, like sub 4%, some even sub 3% if you refinance during the pandemic. This is
why it's such a unique cycle, because everybody got the greatest trade, as Jeffrey Gundlach said back in late 21. If I can get 30-year fixed rates below 3% and my wages are going up 4.5% per annum, he said it was the best trade to do. And I think a lot of people have refinanced at very low rates and thus don't want to move. So the housing market's kind of blocked.
Okay, so apart from the housing market, what else should we be thinking about that would
You need to be watching auto loan defaults. I mean, and I would argue that, with the last CPI report, we saw a jump of nearly 20% in auto insurance. So this is all going to hurt spending in time.
Alexandra, we are in the beginning of earnings, and I feel like, we're listening very closely to the commentary from CEOs. I'm curious what you are noticing, what you're seeing, and how that's translating into maybe the equity side of things, certainly sectors that could be impacted as a result of those higher rates and maybe the consumer slowing down.
Yeah, well, so far, there's just been a lot of cross currents. This is a market where there's a little bit for the bulls and a little bit for the bears. Obviously, we've seen, there continue to be concerns that we haven't seen the full impact of 0 to 5+% interest rates, that could still catch up with corporate America. But so far, earnings have been coming in better than expected. And the takeaway here is that investors aren't only paying attention to third quarter earnings results, which are so far showing a recovery in corporate America, but they're also looking ahead to expectations for earnings growth in 2024. And that's going to continue to drive stocks higher. Strategists at Goldman Sachs actually said that the equity investors are in a very good spot right now because we've seen a come down in valuations to longer term averages after the weakness that we saw over the last couple of months. But at the same time, we're still seeing earnings revisions go up. So that's really setting the ground for a potential year-end rally in stocks.
This is when looking at equal weighted versus market weighted is really important on some of these market indices. I don't know, Michael, so how do we're going to give you the last 30, 40 seconds.
Well, I think the silver lining if you're a bond investor is that you are looking at the best yield since 2006.
That's something.
That is something. And we've got, if you're earning 5% on your retirement savings by just locking them up in T-bills, life's pretty good.
I mean,
so not everyone feels bad about this.
There's nothing wrong with getting 5% guaranteed a year for the next 10 years at no risk, right?
Yeah, well, historically, if you look back, 5% on a 10-year, that's pretty good.
Okay. Problem solved.
Yeah, I don't know.
Just don't worry about
Might
those
not
mortgages.
be so good for the stock market.
Just don't worry about those mortgages. Just don't worry about equities. You're getting 5% in, the 10-year for the next 10 years. You don't have to worry about stocks.
I don't know. I feel like there's still a lot of TBD here, but it feels, thank you so much. Thanks for coming back. Bloomberg News rates reporter Michael McKenzie here in our Bloomberg Interactive Broker studio. And our thanks to Alexandra Semenova, Bloomberg News equities reporter with us on Zoom in New York City. Just getting started, folks, on this Jay Powell Thursday. We're going to hear from him a little bit later on.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:21 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks are lower. This update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit Glenmead.com to learn more. And we do check the markets all day long for you here at Bloomberg. We're getting word an Iraqi base housing U.S. and international forces has been targeted by drones and rockets. Multiple blasts heard inside this base. Coalition forces injured. We're hearing this is the Assad Air Base in western Iraq used by U.S. forces. Details are light. This does not seem like a major incident, but it is a reminder that just a lot is going on in that part of the world. Fed Chair Jay Powell speaking here in New York, saying geopolitical risks related to the Mideast could weigh on the economy, and also saying the Fed is proceeding carefully on any more interest rate hikes and inflation is coming down. But
we cannot yet know how long these lower readings will persist or where inflation will settle over coming quarters. While the path is likely to be bumpy and to take some time, my colleagues and I are united in our commitment to bring down inflation sustainably to 2%.
And that's maybe what investors are focusing on from Powell's chat with our David Weston at the Economic Club of New York. The yield on the 10-year Treasury creeping higher, 4.97% right now. Powell also telling David that the Fed has to let the rise we've seen in bond yields play out, and we're watching it. We're certainly watching it. Investors certainly watching it right now. The Dow down 0.7%, down 244 points. S&P 500 down 0.8%, 35 points. The Nasdaq down 0.9%, down 123 points. Spot gold and NYMEX crude, they are both higher, significantly higher. Spot gold up by more than 1.5%, 1977 an ounce right now. And crude oil up more than 2% at $90.27 a barrel. Netflix shares gaining more than 16%, posting its best quarter for subscriber growth, and also crediting a strong programming slate. And of course, it's a Crackdown that we all know and love on password sharing. And that's a Bloomberg Business Flash. Carol and Tim.
Tim's brother, are you listening?
Yeah.
This is your
a lot
fault.
of drama.
This is why.
If you were to ask my brother the worst thing that's happened to him over the last year, he would no doubt say the trouble that
What's
I've had
his name?
logging into...
What's his name?
Matt.
Matt, if you're listening,
Logging
call
into the
us.
family Netflix account.
What do you mean? Denise mentioned it's up about 17% this year. It's pretty much staying just off its highs of the day. The high was up 18%. So it's holding on to the gains despite the Fed talk, the focus on rates. Netflix now up almost 37% year to date.
Wow. So this after the company said it's raising prices for some customers here in the U.S., the U.K., France. It's posted its best quarter for subscriber growth in years. It's a sign that management's confidence in the future, even as rival streaming services lose money. Speaking of rivals, meanwhile, profit at Walt Disney Sports TV networks fell 20% through the first 9 months of fiscal 2023 as the company provided the first peek at that business on a standalone basis. We got with us a great voice on all things media and streaming, Geeta Raghunathan, tech and a media analyst at Bloomberg Intelligence. She joins us on Zoom from BI headquarters in Princeton. Geeta, I want to get to Disney in a few minutes. First, let's just start with Netflix. Wow, great quarter from the company. It turns out that cracking down on password sharing actually does lead to people signing up for Netflix.
Yeah, it absolutely does. And this, it just tells us about the power of the platform, right, Tim? Because Netflix, I think, today is really more like a utility almost. And so people really do want to have this service. It's a must-have when it comes to streaming content. And that's kind of reinforced by the fact that, you just look at their subscriber gains in the third quarter. And what's even more surprising is that the guidance that they gave for the fourth quarter, apart from the fact that they do expect the subscriber momentum to kind of continue into 2024. So they do recognize the power of the platform. And I think the real gutsy move was the fact that they really announced that those price changes, right? So they know that they have a lot of pricing power. They know that people really love their content and are going to sign up no matter what.
In terms of where they announced those price increases, is that where they're growing the most?
That's where their ARPU is the highest. So their average revenue per user number is the highest. So those are the markets that contribute the most in terms of revenue. So yes, they wanted to make sure that they're able to kind of offer a nice a variety of different price points, but they also know that taking up the premium price, so they increase the premium price plan by about 15% in the US. So instead of costing $20, now it'll cost about $23. So kind of really forcing you to pay up, but again, offering enough flexibility because they left the ad-based plan at that low price point of $7. So what they're effectively trying to do is push more and more people to take advertising, because though they mentioned that advertising is kind of building, it is gaining traction, they still do need a critical mass of subscribers on that ad-based plan to really attract the big ad dollars and build up a huge business.
One thing I want to ask, do you feel like, following this report, Geeta, that it's Netflix when it comes to streaming and everybody else? Like, Netflix just seems to have figured it out, especially when you look at their, free cash flow.
They certainly have figured it out. I mean, 1 year ago, we were in the midst of this great Netflix correction, and we were all scratching our heads about, what is the end game for streaming? And they've kind of really definitely cracked the code when it comes to building subscriber scale, when it comes to profitability, because you just look at some of the profit metrics that they threw out there. There was a little bit of concern, Carol, about their margin trajectory, but they kind of put that to rest because they said that, they will get to 2 to 3% increase in 2024, so about 23% operating margins. And I think the real positive commentary was they said there's really no ceiling here. So, they know that they have a lot of operating leverage in the model, and it's been a complete shift in the tone, in the sentiment from last year and definitely from last quarter. There's a lot more confidence in the story. I think it's emerging as a real clean story now, and a lot of levers that they have to pull going out into the next few quarters.
I got to push back on Carol's comment about year to date a little bit, Carol. Forgive me. Netflix might be doing very well year to date, but if we take a look at what it's done over the last few years, we are still down, Geeta, more than 40% from those all-time highs that were reached back in November of 2021. Where is Netflix right now after that terrible few months that it suffered a couple years ago?
Yes, I think, that was obviously the perfect storm. And I think in our minds, we had kind of always thought of the total addressable market for Netflix as kind of being this $1 billion user market. Of course, when they kind of hit the wall and they started even losing subscribers, there was definitely this reset, a recalibration of kind of assessing the whole streaming space. And now I think we've kind of finally come to the conclusion that it's probably closer to about 500 million. That's kind of what Netflix keeps saying over and over again. They're at that halfway point. So, out of that 500 million market, they're already at 250 million. The question is, are they going to be able to get to the next 250 million? I think so. I mean, maybe not, total penetration, but I think they'll get to almost 60, 70%. They're at almost 60, 70% here in the US. So there's no reason they shouldn't be able to get to that in other developed markets as well, and kind of really build that base in emerging and developing markets.
I was thinking about the conversation at Screen Time with Ted Sarandos that Lucas Shaw had, and I do feel like this is a company, Geeta, that does figure out how to pivot. If you think about the origins of this company, right? Like, it's just pretty amazing.
Absolutely. I mean, they introduced DVD. They knew when to get into streaming. They knew when to make that pivot from licensed programming to original programming. And they knew also when to make the pivot just from English originals to, originals in all kinds of local languages. And that's actually performing really, really well for them. So they've really known how to kind of adapt and kind of be the leader.
Geeta, I mentioned Disney because we gotta talk a little bit about the peak that we got at Disney's sports TV network profit. It fell 20% through the first 9 months of fiscal 2023. You wrote that the results could help Disney attract outside investors, and you also said the business could be worth as much as $22 billion based on those newly released figures. Give us your interpretation of what we saw released in that filing yesterday.
Yeah, so there was a little bit of both good and bad news, I would say, Tim. So the good news is that the top line is relatively stable. So they do generate a pretty hefty $16 billion per year, both from affiliate fees as well as advertising. This is just the ESPN division, both domestic and international TV channels, as well as their ESPN Plus streaming unit, which is pretty good. And, the fact that it has been pretty stable, hasn't really moved around too much, that's good news. The bad news is their margins are fairly low. So we're talking about mid-teens operating margins. And the reason why this is pretty low. And I say it's low because you look at a cable network, an average cable network, the typical margins are around 30-35%. So this is a little bit of a different animal because, you have sports rights fees, and sports rights fees are not only huge, they also keep increasing pretty rapidly year after year. And so that's one thing that kind of ESPN has to grapple with, that reality. So margins are pretty low. EBIT or EBITDA is in decline. So they do have to do something. They have to do it fast. Obviously, this is a very, very valuable asset. Everybody knows that. They have tremendous reach. They have tremendous brand name. So I think, they're of course looking for a distribution partner. I think that's kind of why they want to provide this transparency in terms of, their financials. So we'll have to see how it plays out.
So Geeta, distribution partner, or do they just want an outright sale of it? Or do they want to still kind of have some control or connection with it? And just got about 30 seconds.
Yeah, I think they still definitely want to retain the asset. I mean, this is a huge asset for them. So I think they definitely want to have some kind of control. But they also need a distribution partner. So they've been looking at different, players, whether it's a Verizon, whether it's an Apple. So we'll have to see how that kind of plays out.
All right. So appreciate it. You are our hidden gem. Geeta Ranganathan, she's technology and media analyst at Bloomberg Intelligence, joining us from BI headquarters in Princeton, New Jersey. But man, I love talking on media with her. She's just so on it and just knows it all.
It's pretty amazing to see Netflix up 17% today, Carol.
Yeah, in a day where we have seen certainly the equity side of things whipsawed in the markets, and Netflix is pretty much held on to. And this is when we'll have strategists or folks in say, you got to look company by company in this marketplace.
Especially on the day the Nasdaq's down 0.9%. Hey, let's get a check on the latest world and national news. We've got Nancy Lyons back with us. She's in the Bloomberg 99.1 newsroom in Washington, D.C. Welcome back, Nancy.
Thanks, Tim. Israel has been pounding the Gaza Strip with airstrikes, including in the south where Palestinians were told to take refuge. Palestinian militants, meanwhile, have been firing rockets into Israel from Gaza and Lebanon. Amid all this chaos, efforts continue on delivering aid from Egypt to Gaza. Mohsen Serhan is head of the Egyptian Food Bank.
Everything is ready to go. We have around 120 trucks that is completely paid for by the Egyptian people.
Sarhan says they're now working to patch roads pummeled by missiles. Israel is concerned, though, that the aid deliveries could end up in the hands of Hamas. There are concerns that tensions over the Middle East could broaden here in the U.S. Ireland says domestic threats have spiked since the Hamas-led attacks on Israel. Well, there's been a potentially significant development in one of the criminal cases against former President Trump. His former attorney, Sidney Powell, who's one of Trump's 18 co-defendants in the Georgia election interference trial, has agreed to plead guilty to 6 misdemeanor charges. Judge Scott McAfee outlines her punishment.
On count 1, conspiracy to commit intentional interference with the performance of election duties, the sentence would be 12 months probation. And counts 2 through 6 would also be 12 months probation consecutive to each other and to count 1 for a total term of essentially 6 years probation.
Sidney Powell has also agreed to cooperate fully.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:40 on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini, and now we go over to the first word breaking news desk for today's afternoon call. And for that, here is Bill Maloney. Bill.
And good afternoon, Denise. U.S. stocks in a choppy session amid comments from Powell. The Dow is currently down 244 points. S&P's dropped 36, and NASDAQ is lower by 125. The U.S. 10-year yield jumps to 4.97%. Gold is up 29. Oil is also climbing. And Bitcoin is higher by 1.7%. Among the main 11 S&P sectors, only telecom was in the green after the AT&T earnings. Consumer discretionary and real estate were under pressure. Leaders to the upside in the Dow, Salesforce and Verizon, while Caterpillar and Travelers led to the downside. After earnings, AT&T did rise 6.7%, Netflix climbed 17%, and Tesla fell by 10%. In other news, Powell said the evidence is that policy is not too tight right now. And wrapping things up, some of the names pointing after the bell tonight include Rail CSX, Intuitive Surgical, and WD-40. Live from the first word breaking news desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. To hear live breaking news over your terminal, just type SQUA, that's for Squawk, on your Bloomberg terminal. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It drives me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we are driving towards the close, just under 18 minutes until we wrap up the Thursday trading day. And one of the stocks certainly that's having an impact in the market, Tesla shares. They're about 1.7% of the S&P 500, nearly 3% of the NASDAQ 100, and they are definitely under pressure today, Tim.
Yeah, down 10.3% as we speak. This after third quarter results fell below consensus analyst estimates across the board, Carol. We're talking profit, we're talking sales, we're talking margins. Elon Musk also struck a cautious tone on the call yesterday.
He seemed pretty bummed out, right? He dialed back expectations for Tesla as years of rapid expansion collide with rising interest rates and a more cost-conscious consumer interest. Everybody was consumed with how many times he said interest. Dana Hull is senior technology reporter for Bloomberg News. She's back with us on the phone in San Francisco. Dana, thanks for being with us. Gosh, it feels like it was he was really pretty bummed out here following this release. But let's go. Give us, first of all, the highlights, the lowlights, and then talk to us about his tone on the call.
Yeah, so we sort of knew that it was going to be a bad quarter because Tesla missed their delivery targets in terms of how many cars they delivered to customers in 3Q. So we knew it was going to be that bad. But even then, they missed on EPS, they missed on margins. And then what was funny was that it was like this weird thing. So that it was a bad quarter, but they announced that they were going to hand over the first Cybertruck on November 30th. So initially, after the release hit, the stock was actually positive. We were like, oh, okay, everyone must be excited about the Cybertruck. Then the call begins, and Elon was like the most dour, downbeaten, downtrodden CEO I've heard in a while. And he has different moods, right? Usually he's very ebullient. This was dour Elon. I mean, he said things like, I'm scarred by 2009 when General Motors and Chrysler went bankrupt. That is seared into my mind with a branding iron. Then he talked about the challenges of the Cybertruck, and he said, we dug our own grave with the Cybertruck. Nobody in general digs their own grave better than themselves. And then he spent a lot of time just talking about interest rates and how we have to make our cars more affordable, and that when interest rates are high, that just raises the price of the car for the average consumer. So I mean, he's complained about interest rates for quite a while, but he was just he just sounds deflated, and it really brings into question whether Tesla is going to hit their target for the year, if more price cuts are to come. So it was wild, and you're seeing the stock is down 10% today. That's a big move for Tesla.
Does he need a warm puppy or a new plan?
I think that I was talking about this earlier today with some colleagues. I think the one thing that people forget is that the era of free money is over, and Tesla's growth story was really fueled by these rock bottom interest rates that lasted for over a decade. And this is the first time that Tesla has really been in a high interest rate environment. And the automotive industry is very cyclical. People are very price conscious. When you have mortgage debt, when you have credit card debt, when like the cost of food is through the roof, when like your personal paycheck is, not going as far as it used to, like a car is a really big purchase for people. And if you can't afford that monthly payment, you're going to wait. And unfortunately, like Musk has kind of trained us all to know that like he will continue to cut prices. So I think a lot of customers are sitting on the sidelines wondering if he's going to cut prices yet again. So there's just so he's in a little bit of a pickle. I think that you're going to see a lot of analysts change their price targets. You're going to see a lot of forecasts for 2024 come down. And then we also, so now last point. So they're going to hand over the Cybertruck on November 30th. We still don't know how much it's going to cost. Like they still have not given any specs. So that's like a big missing number.
Did this make you feel, Dana, like it was 2018 for Tesla all over again when, describing production hell, sleeping on the floor of the factory? Is it that Elon Musk?
It's a little bit. It's like we're in interest rate. I guess we're in interest rate hell. And yeah, I mean, I think anytime a company brings forth a new vehicle program, it's tricky. It was just interesting because he did kind of allude to the fact that like getting the Cybertruck out in high volume is going to be hard, and like. You would think that Tesla would have learned these lessons over time, but this is like a whole new vehicle. He said he's like, the Cybertruck has a lot of bells and whistles, and it's like, well, geez, like, do they need all the bells and whistles? Like, I would love to know, like, what exactly is so hard about this truck? Like, he kept saying on the call last night that they dug their own grave with it, but like, why exactly? Like,
Kevin Tynan on our air yesterday, Dana, made the point that it's every other car that they've built has sort of been based on the same. It's not the same. Is it the same chassis? It's the same platform is how he described it. This is like so risky, starting something completely from scratch, building it out of stainless steel. I mean,
stainless steel. Yeah.
It's a big risk for the company.
I did see one. So like they do exist. Like I actually saw one like driving in my Oakland neighborhood while I was like walking to Trader Joe's, and it went by like.
You're being followed by Tesla, Dana. Bad news.
I couldn't get a close look, but I was like, oh, there's a Cybertruck. Look at that. And so like they do exist, but yeah, like it is risky. And I think a lot of the things that Tesla has done, like they announced this new plant in Mexico, and he also kind of slow walked the plant. Like they're gonna. I mean, they're still going to do it, but they're not going to, they might not like construct it as fast as originally planned. Like they just, he's worried. Like he's, to his credit, he's like the longest serving automotive CEO right now, right? He has been the CEO of Tesla since 2008. So he has been through these economic cycles, and I think he's pretty astute to them. I mean, he was also warning like commercial real estate is there's more shoes to drop with commercial real estate, and he was talking about credit. Like he was like, it was interesting to hear him kind of expound on economics. But like the more he talks, the more the stock tanks, and then you're really seeing that sell off today.
As someone who covers this company and the twists and turns of all things that are Tesla and Elon Musk, I do wonder, he's gone through different periods. Is this just another different period or something different, do you think, in the life cycle of this company?
It's a little bit different in that, he has not had to manage a kind of high interest rate environment for quite as long as they are managing in that now. Consumers do have other options when it comes to EVs. I mean, for a long time, we kept hearing that the competition is coming. The competition is not that robust. I mean, the competitors are still selling in pretty small volumes, but there are choices. And then, frankly, I think the big elephant in the room is that Elon Musk bought Twitter. That is an albatross around his neck. He's got this huge debt payment, and his buying of Twitter and his sort of public persona as this media mogul has turned off some of his most like loyal consumers. Like we live in a polarized country, and people like used to think that Elon was like this like clean tech Democrat, and now they think that he's this like right wing guy. And I have no hard data on how that's digging into demand, but but there are definitely people that are like, for political reasons, I'm never going to buy a car from this guy because I hate what he's done with Twitter.
He's controversial. You either like him or you don't.
Should have known.
What?
That that would spread. He should have known.
Dana Hull, so appreciate it. Senior technology reporter for Bloomberg News. His slump, Elon, his fortune also slumped today.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm Denise Pellegrini. AT&T, one of the companies we're keeping a close eye on today, shares gaining, company raising its cash flow outlook and also delivering an earnings beat. More on what happened from Bloomberg's Tom Busby.
AT&T now boosting its free cash flow guidance for the full year after posting mobile subscriber gains and profits that beat analyst estimates. It also raised expectations for a measure of adjusted earnings. Now this signals AT&T may be gaining back some ground amid the headwinds the telecom industry is struggling with as new mobile customer demand slows. The company and rivals Verizon and T-Mobile US have been trying to steal away each other's customers in recent years in a desperate hunt for growth. Meantime, promotions for Apple's new iPhone 15 could help lure new mobile subscribers, but we won't see the effects of those deals on the carriers until we get the results for the current quarter. Tom Busby, Bloomberg Radio.
Thank you, Tom. And shares of AT&T, they are up by better than 6.5% right now. Nokia plans to cut as many as 1,400 jobs as a slowness in investment in fifth-generation mobile infrastructure forces it to take cost-cutting measures. Citigroup has fired an employee who posted an anti-Semitic comment on her personal social media page. Company investigating after the employee's post was screenshotted and posted on X by the nonpartisan group Anti-Semitism. And Paxlovid could be about to get more expensive. Pfizer says it will sell the antiviral to private payers in the U.S. at a list price of almost $1,400 for a 5-day course. Those are some of the company stories we're following. I'm Denise Pellegrini.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just got a few minutes left into the trade. We're going to head over to our TV colleagues in just a moment to take you down to the close here on this Thursday. Having said that, we were just talking about Tesla specifically, Elon Musk with our Dana Hull. Well, I kind of just got it in at the tail end, but he might be a little bummed out because, man, his fortune has been whacked.
Yeah, his wealth has shrunk by $16 billion just after this Tesla miss. So much of, well, he's pretty diversified, Carol. He's got, a lot in Tesla, a lot in Twitter, a lot in SpaceX.
Yeah.
Only one of those is publicly traded, so it's only one we can monitor in real time. And Tesla taking such a hit today, down 10%.
We know Twitter's like having its issues, just to say the least.
Yeah, but it's a private company, so
we don't know exactly what's
it's
going on.
worth what somebody will pay for it.
He's still the richest person on the planet. I forgot about that. A fortune of $209.8 billion. He owns 13% of Tesla, and most of his wealth comes from Tesla specifically. So when the stock takes a bit of a downfall or takes a hit, yeah, he's going to feel that. What? What's the matter? Is that a violin you're playing?
No, I actually didn't realize he was still the wealthiest person on the planet. I thought Bernard Arnault had surpassed him.
Guess not.
But if you type in Rich Go on the Bloomberg terminal, it's one of my favorite things to do on the Bloomberg terminal. Yeah, do you know it? Oh, it's so cool.
Okay.
It
I didn't
shows
know it was your favorite.
I said among my favorite.
Okay.
One of.
But by a mile, by a quite a large amount.
$225.7 billion net worth. Hasn't been updated for today yet. It's gone up so far this year by $88 billion thanks to Tesla's increase this year. And of course, SpaceX's funding rounds as well. Bernard Arnault is in second place at $154.3 billion. Jeff Bezos is in third at $152.
So take off $16 billion from today, and you still have what, $210 billion?
Yeah, good point.
Not too shabby,
Still
but it's
the wealthiest
interesting.
guy in the world.
Yeah, but this is a guy who, it's interesting to hear him feeling kind of stressed, and as Dana
That's why I asked Dana about this
smart.
in 2018, because that was a time that I think a lot of people remember. He was incredibly stressed about the Model 3 production.
If you watch the morning show, they have a great character that's basically a play on
Season
Elon
3?
Musk. Yeah, season 3.
We haven't watched that one yet.
John Hamm playing
Still
the
haven't
character.
hooked up the TV since our move, Carol.
Work on it, kiddo. Work on it.
I know, priorities, right?
Don't go anywhere, folks. We're heading over to our TV colleagues. We're going to take you down to the close on this Thursday. This in a wild market day, thanks to those comments from Fed Chair Jay Powell. Stick around, though. Right now, Beyond the Bell starts now.
And beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenovic. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and, of course, the folks still streaming on YouTube.
Still?
Still.
YouTube is huge.
What do you mean? They keep on streaming. They
It's
keep
the
growing.
future.
Yeah.
I love it. Yeah.
Have you heard
absolutely.
about those streaming services? Netflix, Apple Plus, you know, all those things?
No, never heard of them.
He's a cable guy.
He's a cable guy. I love it. He's got like probably a TV at home with those little, ears on it.
No, I don't. I don't have cable. I don't have anything.
Do you really not?
No, I just keep our radio,
Cord cutter.
our dial radio tuned right there.
Yeah.
To Bloomberg Radio.
1130 here in New York.
Stenovic
Thank you, Romaine, for
and Carol
doing
Masser
that.
every
Thank
day.
you so much for that.
absolutely.
Hey, did you guys see what's going on with money market funds? I was just kind of like going through a couple of stories. Money market funds seeing the biggest weekly outflows in 15 years. So going back since September 2008. This is through October 18th. I thought that was pretty significant.
Did you say outflows?
Yeah, about $99 billion left U.S. money market funds in the week through
I
October
thought everyone
18th.
was buying money market funds
I
because...
thought, what does that mean?
All right, that's an interesting story. Hey, Scarlett, I was just looking at the S&P 500 and what happened today, and searching for direction much of the day, swinging between gains and losses more than a dozen times. But then at about 1:30 today, just moved decidedly lower, and it's been there all day.
And we've seen volume pickup as well, certainly in the S&P 500. Notably, volume in TLT, the ETF that tracks longer-dated treasuries, really picked up. It went above average at about 12 p.m., right when Powell began speaking.
Yeah, absolutely. And I mean, look, these market ructions and the volatility around it, he was asked about that by David West, and he said, the Feds keep an eye on it as they should, but at least for right now, he seems pretty comfortable not actually taking any action on it. The Dow Jones Industrial Average lower on the day by roughly about 260 points as we wait for these numbers to settle. A close right around 33,412, down 0.8%. A similar move lower of about 8 to 0.9% for the S&P 500 that pins it right around 4,277 and change. The Nasdaq Composite down more than 100 points or about 1% on the day. And your laggard, the small caps, the Russell 2000 lower by 26 points or 1.5%.
Yeah, that heavier volume, and you are seeing investors really kind of run away from everything. Taking a look at the S&P 500, Scarlett, you've got 428 names in the S&P 500, lower on the session, 74 higher and 1 unchanged.
Yeah, and that is reflected when you look at the sector performances as well. Let's start with the outliers. Telecom stocks, which only basically has 3 or 4 members, up 2.6%. That is AT&T as the big gainer there. Software and services and media entertainment, they're notable in that they did not decline. On the downside, Tesla dragged the auto and components index off by 8.1%. Real estate investment trust also losing about 2.4%. And diversified financials, that's really Discover and Blackstone dragging that index lower as well.
All right, guys, let's get to some of the individual gainers. Netflix, certainly among them. We were just talking with our Geeta Ranganathan. I mean, this one pretty much holding on to all of the day's gains at its highs up 18%, finishing the day with a gain of 16%. Top in the NASDAQ 100, top in the S&P 500. We know what it is, that big subscriber add, 8.76 million customers added in the third quarter, far exceeding analyst estimates. Best quarter for subscriber growth in years. And also the cash flow number. I mean, Netflix knows the streaming business, knows how to do it, knows how to generate a lot of cash. So definitely an outperformer. Dexcom, this continues to be on my radar, up another 2.2% in today's session, up 15% in the past 5 trading days. Maker of glucose monitoring systems, it's been under pressure because of this new class of weight loss drugs, concerned about everybody else going to get hurt in the process. Barron's earlier in the week saying this has been overdone. And you also had outperform rating come from Leerink Partners earlier in the week, and they put a $110 price target on the company. The stock closing at $86 today. Just want to mention AT&T. This was top in the S&P 500, also higher on the day, up almost about 6.5% here, raising its free cash flow guidance for the full year after posting mobile subscriber gains and profit that beat analyst estimates. So some really big outperformers in a day, a market day, equity market day, Tim, that was really all over the place.
Yeah, also some big underperformers. Got to start with Tesla, the worst performer on a points basis in the S&P 500, finishing the day down by 9.3%. It was a miss across the board, whether you're talking about profit, sales, or margins. And expectations were low already going into the quarter. We should note, we did speak to Dana Hull just a few moments ago. She described Elon Musk's mood on the call yesterday as dour and reminded us that he slow-walked the factory in Mexico and described Twitter as being an albatross across his neck concerning potential customers for Tesla cars, now associating him with everything that's happening on Twitter.
Was there a way to avoid that? that?
But not buying Twitter.
Okay,
I think
just
it's the way to
checking.
avoid that.
While you're talking on Tesla,
Yeah.
before you move on, actually some breaking news now. Toyota actually striking a deal with Tesla to use their superchargers, and I guess maybe that could end up being a material boost at some point. Tim, remember they struck those deals I think earlier this year with GM and Ford.
Yeah.
So kind of interesting that maybe the secret sauce for this company isn't just selling cars, but kind of relying on that infrastructure that it's built out.
So now you can go charge your Mach-E there soon.
I mean, I would hope Elon would know that. I mean, if you got off Twitter, maybe you would see that.
X is what it's called, I
Oh,
think.
X, I'm sorry.
Let's go to Blackstone. The next decliner that I wanted to point out is notable today. Reported a 12% decline in quarterly profit to shareholders today. Higher interest rates, a pullback in deal making, hurting profits, finishing it down by 7.9%. And then finally, shares of Canada Goose actually plunging today to an all-time low, fell nearly 10% before closing lower today by around 4.4%. We had two different analysts, Wells Fargo and TD Cowen, recommending investors move to the sidelines. Warmer than usual fall weather not helping, consumers pulling back, not helping at all, but a record low for the company today.
All right, let's take a look at the yield space. There was a lot of activity there, a lot of it on the longer end of the curve, with the 30-year yield up about 10 basis points on the day, I should say. And that 10-year yield going to close out the day only up by about 6 to 7 basis points here. But we should point out, at one point on the day, earlier in the session, it did reach 4.992. And of course, everybody looking for that 5% threshold. We talk about what is now basically a 16-year streak where we've been below that 5% threshold. So there's a lot of concern here about what happens when we get to that threshold, and more importantly, if we go meaningfully above it. And we actually spoke with Vishal Kanduja over at Morgan Stanley. He actually said this could actually end up being the buying opportunity that a lot of bond investors are looking for. The idea that there is sort of this sweet spot here where you can sort of lock in that yield and still get some good price appreciation should yields start to come back down soon.
I talked about that with Michael McKenzie earlier today. I mean, there is a silver lining to all of these rates moving higher, and that's rates moving higher. The fact that you can actually get, 5% on a 10-year, for the first time in a really long time.
Yeah. And everyone's asking. I mean, it's, you always talk about sort of when you get these market inflections is, the old story was like when the shoe shine person or the taxi driver starts talking about it. And, it's funny. I mean, I got family members asking me about buying 10-year treasuries, and I'm like, I don't know.
You're like, I don't know. I just talk about it all day, every day. But I'm not going to tell you what to do.
I talked about my 20-year-old, like opening up an account. She's like, Mom, I did a money market because, I can get like 4 or 5% on it.
Smart.
Like,
Yeah, there you go.
It's kind of
taught her well.
Sounds like an economics major.
I do wonder, though, the flip side. That's great, right? If you want to kind of lock something in longer term without the risk, but at the same time, you do worry about this higher rate environment, whether it's on car loans, auto loans, on the mortgage industry. You do see certainly that impact and that slowing down.
All right, I want to just jump in here for a minute because CSX is the loan company that we're really monitoring here, reporting earnings. And here, the stock is lower in after-hours trading after EPS for the third quarter missed analyst estimates, 42 cents, a penny shy of the consensus estimate. Revenue did beat the consensus estimate. It was down 8% from last year, but at $3.57 billion was slightly higher than the expected $3.55 billion. Operating income of $1.3 billion matches the consensus estimate, and operating ratio was actually 1 percentage point higher than what a lot of analysts had anticipated. It was 63.8% for the quarter.
It's interesting. I mean, we've only gotten a smattering of companies so far, at least in the S&P 500. I think about 60-something companies so far have reported. But of course, we know that picks up in a big way next week with almost 200 companies. And I guess the question is sort of like, are we hearing the same thing from these companies? I know the numbers are going to vary, but when we talk about their commentary about economic conditions, about consumer spending or business spending, are they all singing from the same hymnal?
Yeah, higher fuel costs, it comes up quite a bit, certainly for the industrials.
Yeah, I'm looking at CSX, their press release, and they are talking about we are encouraged to see improving sequential trends in some of our key end markets. They talked about their merchandise business remaining solid, our coal operations delivering strong volume growth. So that to me sounds a little bit optimistic.
Did you say the part about encouraged to see improving sequential trends?
Yeah.
Okay, so that's something.
Didn't I say that?
Yeah,
Glad you listened to me.
She did say it. I was actually listening for the first time, so I heard it. Yeah.
For once in your life.
But what becomes the next catalyst? I mean, we talk about Jay Powell, who was speaking a little bit earlier today, Carol, and then, of course, we have all those earnings. Is that it? Is that it?
I think we're all waiting for rates to really peak out, top out. And at this point, we went from talking, 5%, and now I'm hearing kind of a drumbeat of maybe 6%. So I think that's what we're trying to figure out. How high and then how long do we stay at those rates?
Katie Kaminsky's been saying that for months at this
I'm
point.
holding out for like 8 or 9%.
Oh, boy. I mean, 5%.
I would literally like liquidate
Are you really thinking
my
8 to
portfolio
9%?
and just lock that in, given my age. Yeah.
5% is increasingly becoming
old,
the
Carol.
normal. It's the when,
need
not
stability.
if kind of question here.
And income.
No, it's
He's still going on about his high yields.
And that's the one thing I think about what Dana Hull said about Tesla. I know we've got a wrap here, but it's just interesting. She's saying, Tesla is this company that has been living in a, free money environment, and now they're in a very different environment, and that is something that Elon Musk is trying to get his head around. All right, guys, I've got David Weston. I got some more important things to do.
Interesting.
Continue this.
I had a retort to that. Do we not have time?
We got to run. Nope. Okay. Tomorrow we can do it. All right, that's a wrap for our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you again tomorrow. Club of New York. We've got some video we just want to play for everybody. The chair of the U.S. Fed escorted initially out of the room where he was giving a speech on monetary policy. There were some protesters that interrupted the New York event. It was the Economic Club of New York City. And we know, we're living in unusual times and everything just doesn't always seem to go as planned. Nonetheless, it did go on and he made some remarks and then he did a really interesting and engaging Q&A with the host of Bloomberg Wall Street Week, David Weston, who joins us now. And you are more important in terms of what you...
No, I really am not. I was going to correct that. That was the main thing I was here to say. No, I'm not more important than Romain Bostic.
But it moved the markets in terms of this conversation with Jay Powell, and it moved it several times, David, in different directions.
Well, exactly. It moved it, then moved it back again, didn't it? I think it's what happened. I wasn't watching the markets, but that's what I had caught up with afterwards. But, it's such a great opportunity to sit down with Jay Powell because he's really studied this stuff. He knows it. He's thought about it. He's very open.
Was it a little crazy the way it started, though?
Well, it was surprising. There were about 8 people, I'd say, who came in, and they had sort of a banner. It was about investing in fossil fuels. And they basically were essentially, as I understood it, demanding that he ban all investment in fossil fuels. And one thing that was a little odd about it is I'm not sure that if you're going to go after that issue, he's the best person to go to.
I was going to say, stable prices and maximum employment, last time I checked, were what the Fed was responsible for. But I do want to stick with that a little bit, David, because we have you here, and we've played tape from the event throughout the program. When you do an interview like this, you try to be prepared for everything.
Right.
But that must have been actually surprising.
Oh, yeah, it was surprising. Although, we all know this is the world we live in now, right? You didn't expect it. But as soon as it happened, actually, we said to one another, this is sort of the world the way it is now. Yeah. And it's a question of how much do you have to have security? You talk about increased expenditures. If you're putting on big events now, I think you really have to think seriously about having some security.
Carol and I were at the U.S. Open, and during Coco Gauff's match, it was climate protesters.
Yeah. When the person glued their feet to the...
It's like, and Coco Gauff afterward was like, I wasn't, at this point, I'm expecting this.
Yeah. It's where we are, sadly, in our society. Everybody's going to extremes.
So let's talk about this conversation. I am curious, after he made those brief remarks, if you kind of changed how you wanted to start, or what was your thinking about, what do I really want to know?
The one thing I did do is I asked him, did he want to address it? And he said, no, that's just fine. Because, as he said, it's not my job.
Yeah.
That's not really my responsibility. As we've heard him say repeatedly in front of Congress or everywhere else, he wants to stay in his lane. That's not what he's responsible for. So we didn't change it that way. But what we did do, he gave some remarks opening, as you know, to set the stage. And what we did do is we started with a question of the economy, because it is so strong. It's so strong, including today with the jobless claims, and we've had the sales, retail sales numbers that came in so strong.
Resiliency, right?
Resiliency. And so I asked him, is he surprised? Is he surprised at how strong this economy really is?
We certainly have a very resilient economy on our hands. We've got the economy growing strongly. If you think back a year, many forecasts called for the U.S. economy to be in recession this year. Not only has that not happened, growth is now running for this year above its longer run trend. So that's been a surprise, driven largely by consumer spending, driven by a very strong job market with people getting jobs with first high nominal wages, and then as inflation has come down, real wages, which is spurring spending. And we've also had inflation coming down. So, it really is a story of much stronger demand. There may be some ways in which the economy is less affected by interest rates. It's hard to know precisely, but for example, many companies, any company with bond market access will have termed out its debt, right? And therefore may not be feeling the effects of higher rates. The same may be true of homeowners who have a long-term fixed rate low-rate mortgage, who then are therefore not, because it's not an adjustable rate or a higher rate, they're not feeling that increase in rates. So the economy may be somewhat less susceptible to the effects of rate increases. On the other hand, if you look at interest-sensitive spending, these are very much the places where we expect to see and do see effects. So, for example, in housing or in the housing sector has been very affected by higher rates as purchases of durable goods. If you look at surveys, people will not say that it's a good time to buy a car or a house. Quite the contrary. So we see policy working through its usual channels. It may just be that rates haven't been high enough for long enough, and again, it's all happening in a context of very strong demand.
We've heard other people speculate maybe the terming out of debt, as you say, both corporate debt and household debt, may diminish the effectiveness of rate hikes. Do you have a view on whether that's true? And if it is true, what does it say about monetary policy? Does it mean you have to go farther in the rate hikes, or do you just not have the power to affect it?
So no, I don't think that there's a fundamental shift in the way that interest rates affect the economy. There may be some differences in this cycle because of what I mentioned. As I mentioned, we are seeing the effects where we expect to see them, which is interest-sensitive spending and also asset prices to some extent, and the exchange rate, which you're also seeing a strong exchange rate, which is disinflationary. So I don't think there's a fundamental change in the way monetary policy affects the economy. And again, it goes back to just very strong demand. We take the economy as it is. We take fiscal policy and the economy and all the things we don't control, they come to us, and we conduct policy always to achieve maximum employment and stable prices. So we just take what comes. The fact that we have a strong growing economy, a strong growing labor market, and inflation coming down, these are the elements that we want to see that to achieve the outcome we want. It may take more time, but ultimately, this is the kind of thing you would want to see along the path to getting through this without a big increase in unemployment.
So that's fair. That's Fed Chair Jay Powell today at the Economic Club of New York. And the one thing I took away, I must say, Carol and Tim, is it's sort of steady as she goes. Yeah. He doesn't give the sense that he's in a panic, whether it's about the bond yields that have gone up so much, about how strong the economic numbers are that are coming in, any of it. He's not saying he's complacent. He's paying attention to him, but he's not signaling he thinks he needs to do a lot right now.
Well, when I think about, we have so many Fed speakers, right? This is a very transparent Fed. It has been, I feel like the Federal Reserve Bank in general for a while has been very transparent in getting messages out, but he's very consistent. You know what I mean? In terms of, I keep thinking, higher for longer, folks. We've got it. He's going to watch the data. And that's why, I feel like some of the debates we have, guys, they're going to do what they want to do when they go into the Federal Reserve, and have those, regular meetings. It's going to be what's in front of them at the time.
You know what I thought was so interesting too, David, is what he said about people with low interest rates on their mortgages. Yeah. And it's such a good point, and it's so obvious after he said it. Like, the only people who care about high mortgage rates are people who are, A, trying to buy a house, or people who are trying to sell a house. And over the last few years, with interest rates being so low, you have so many people who are staying put.
If you have a mortgage at 3%, it doesn't matter that the going rate right now is 8%.
It's irrelevant.
You're going to pay 3%. But he did admit that it does put a lot of stress on the housing market. If you're in the housing market, it's really tough. It's sort of broken right now. Yeah. And the question is, how long can that stay broken with high mortgage rates that we see them before it really does start to affect the fundamental economy?
Be remiss, 30 seconds, geopolitics.
Yeah, he did own up to the fact that this is really a factor. Whether it's Ukraine or it's what's going on in Israel, geopolitics is a factor which is going to require more spending and more borrowing. Now, of course, he's not responsible for that, as he keeps saying, but we have to take into account, it's a degree of risk that he has to take into account as they try to set monetary policy.
Well, another killer interview. Bosses are calling. You can take the rest of the year off.
Yeah, right, sure.
All right, David Westin, so appreciate you coming in. I know it's been a busy day and a long day. Of course, the host of Bloomberg Wall Street Week, David Westin. You can catch Wall Street Week on Fridays at 6 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV. So appreciate all that you do.
It's always great to be with you.
Don't tell Romaine, but you are better.
No, I'm not. I really am not.
I'm staying out of this. I'm staying out of this.
I got 4 brothers. I know how to do this. All right, don't go anywhere, everybody. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. We check the markets for you all day long here at Bloomberg, and we have some breaking headlines on steel. The U.S. and the European Union, their efforts to reach an accord on steel, well, that has stalled, and that does risk a return of tariffs. Both sides had been seeking a deal to avoid the return of those Trump-era levies. Fed Chair Jay Powell's speech at the Economic Club briefly interrupted by climate protesters, but after the room was cleared, the Fed chair indicated geopolitics, including the war between Israel and Hamas, could weigh on the economy, but at the same time he said, or he seemed to indicate, no rate cut is coming anytime soon.
We have models for everything. We have formulas for everything. Ultimately, as a practitioner, we have to, be focused on what the economy is telling us, even taking lags into account. What's it telling us? Does it feel like policy is too tight right now? I would have to say no. I think the evidence is not that policy is too tight right now.
Yet not too tight. At the same time, the Fed chair did say in that fireside chat with our David Weston that the labor market could be indicating inflation is easing and the Fed would proceed carefully. Yield on the 10-year right now, it's sitting at 4.98, call it 4.99%. Stocks, they did finish lower on these rising yields. The Dow down 0.7%, down 251 points. The S&P 500 down 0.9%, down 37. The Nasdaq down just about 1%, down 121 points. Netflix shares surging more than 16% after posting its best quarter for subscriber growth, thanks in part to that crackdown on password sharing. And the top execs over at Skechers allegedly cost the footwear maker millions of dollars by hopping on corporate jets for places like Fiji, Bora Bora. Those are the accusations in a new lawsuit. Lawyers for the directors, though, argue the Greenberg's plane usage was part of their compensation package. And that's your Bloomberg Business Flash.
Is that frowned upon to just fly on the private jet?
I guess it depends on where you go. Okay. Fiji, Bora Bora.
I thought it was.
That's not like your regular.
You got to do market
commute,
research. I don't know. I'm not a lawyer though.
I guess not. Isn't it all good advertising for Skechers?
Yeah, exactly.
All right, Denise, thank you so much. Okay, so of course we are focusing on the battle. It is a battle again for a new Speaker of the U.S. House of Representatives, but do not forget the battle for the White House just a little over 1 year away. Right?
I mean, I haven't forgotten, and our folks in Washington, D.C. certainly haven't forgotten. Based on current polling by Bloomberg News and Morning Consult, former President Donald Trump is actually leading the current president, Joe Biden. So let the battle among polling begin, Carol. This story, by the way, one of our most read on the Bloomberg terminal.
It is indeed. So let's get to it with Bloomberg News White House and politics reporter Gregory Corti. He is in our D.C. bureau. Gregory, good to have you here. Interesting story. First of all, I always think about a poll. I want to know kind of the structure of it, how it was done, who was polled, and the margin of error.
Yeah, that's a very good question because this poll is unlike any other poll you'll see out there in the field these days. Most people are polling the presidential primaries on the Republican side, and then you'll see national polls, the head-to-head against President Biden and former President Trump. What our Battleground States poll looked at was the 7 swing states that are going to matter the most in the Electoral College next year. We polled all of them individually, and we polled them collectively. And when you poll them collectively, you can get a higher sample size. We had 5,023 respondents in this poll. That gets us down to a 1 percentage point margin of error. It's higher in each individual state. But what it shows is President Trump is leading in 5 of those 7 states. He's leading in Arizona, Georgia. He's leading in North Carolina, Pennsylvania, and Wisconsin. Nevada, President Biden is leading in, and it's a dead tie in Michigan. But across the states, former President Trump is leading by 4 percentage points, and that's outside the margin of error. So it's an encouraging poll for former President Trump.
It's all about the economy, right?
Stupid.
Yeah.
You're not stupid, but it is all about the economy.
So that's what this poll indicated. And I think what's puzzling to me, Gregory, is that the economy is actually pretty good right now. You have unemployment at a very low rate, under 4% right now. You have the number of companies, job openings, almost 2 jobs available for every person who's looking for a job. Retail sales, I mean, yes, we're not seeing the same safety net that Americans had during the pandemic. That's starting to dwindle away. But it sort of seems like to me, a messaging error on the part of the White House.
Look, what we have seen in public opinion going back some time is that there's always a lag between the economic indicators that we pay attention to, especially here at Bloomberg, and how that filters out to public opinion. And the best sort of research on this suggests that voters are kind of looking at the economy in the rearview mirror. They're looking back maybe 3 to 6 months.
Okay.
And it takes a while for good economic news to filter down to people. And so that's part of what's going on here is the number one issue is the economy. And within that, the number one economic issue for voters in these swing states is inflation. And even though inflation has ebbed a little bit, people are still seeing higher prices than they were paying 2-3 years ago. The presidential inflation index, which Republicans like to point to, that's a cumulative inflation rate since President Biden took office, is something like 16% or more. And that's sort of what people notice. Yeah, it's going to take a while. And so what President Biden is hoping is in the next 13 months, he continues to get some good economic news, and people, more importantly, will feel that good economic news.
You know, we talk about new paradigms, and I do feel like people are working, and it used to be you have a job, that's a good thing for a president, right? Because if people are working, they feel pretty confident. But it's like this new paradigm, okay, I've got a job, but man, I'm paying so much for everyone or for everything. And I do think about that, Gregory, that we're just, voters out there, it's a little bit different in terms of, you know, it's not just about having a job and being fully employed. It's a bigger picture.
Absolutely, and one of the good things about this poll, and if I can say, as a reporter, I report on other polls out there all the time, and there are good other polls out there. But when Bloomberg commissions the poll, we get to ask some very good economic questions. And so, one of the questions we asked is, within the economy, what's important to you in the economy? And in normal times, you would absolutely see that. You would see unemployment and good jobs being the top issues. In this poll, what we found, the top issue was inflation, and then taxes, and then good jobs and good wages. People, and what's interesting here is that, you know, wages aren't keeping up with inflation, but people don't blame the wages, they blame the inflation. That's clearly the number one issue for people.
It's also interesting, you know, given that so much stimulus actually happened under the Trump administration. So, you know, certainly the Biden administration has spent a lot of money in the Inflation Reduction Act and you know, certainly with stimulus as well. But it's also a bipartisan issue that, you know, I guess is being blamed on the person in the White House, Gregory.
Yeah, and that's the messaging problem that really any president has, is the presidents get a little bit of a honeymoon period where they're allowed to blame their predecessor for whatever woes they inherited. President Biden is now 2.5 years into his term, more so, yeah, he has to own this economy. We can have academic debates about whether the spending, the COVID-era spending that happened under former President Trump contributed to some of the inflation that we've seen. As I said, that's an academic debate. But there's only one president at a time, and there's only one guy that voters are going to blame, regardless of the administration, and that's the guy who lives at 1600 Pennsylvania Avenue.
Gregory, not to diss your poll or the Bloomberg poll, but
be careful, Carol.
Fool me once on polling, shame on you. Fool me twice on polling, shame on me. Like, I just think about, remember all the polls ahead of the election of Donald Trump? We were really fooled, if you will. So I'm like, how do we know what to really trust, to be fair?
Yeah, and look,
and I gotta tell you, I've never been polled. Like, I'm like, who are you asking?
Oh, and when you ask people whether they trust polls, that's the number one answer you'll hear back from people who don't trust polls is, well, they can't be accurate because nobody asked my opinion, right? Look, and not to get too deeply into the methodology, because we do care about the methodology, and you can go on Bloomberg.com or the Bloomberg terminal and read to your heart's content about the methodology. We talked about the margin of error. It's a very low margin of error across these states. In each individual state, I should make the point that all of these 7 states are within the margin of error for those states. It's only collectively that we have a lower margin of error. But there are other sources of polling error, right? There's how you ask the question matters, who responds matters. And we have seen in the past few years this trend towards what we call shy Trump voters who are less likely to respond to pollsters. We try to compensate for that by overweighting those voters, trying to understand who they are, making sure that we have that the number of people we're polling match the number of people who voted for each candidate in the last election. And so, look, we're always fighting the last war on polling and trying to adapt. But absolutely, there's statistical error, there's methodological error, and let's not forget, there's temporal error in that we are 13 months out from this election. A lot can change between now and November 2024.
Yeah, that's a really good point. And one of those things could be the legal woes that former President Trump is facing right now. What does the polling indicate about voters' thoughts on that?
You know, we did not ask that question specifically. This is a very economically focused.
But I'm sorry, I meant in general polling, not outside of this Bloomberg poll.
No, but what we did ask in this Bloomberg poll, and it's very interesting, we asked, what have you seen, read, or heard about the various candidates recently in the news? And then we asked an open-ended question, tell us what you heard. And we heard a lot when we asked about President Biden, we heard a lot about his age. But when we asked about President Trump, the open-ended response, just tell us what you know about this guy, what we're hearing from both Democrats and Republicans is his legal troubles, his court cases, his indictments. And we're hearing it from Democrats, obviously, who feel like it's disqualifying. We're also hearing it from Republicans who say, all I hear about in the news is about the President Trump's legal problems. That's not the only issue out there, and I feel like I'm being bombarded with it. But it's clearly penetrating. And it was interesting to me to see in those open-ended responses, people really have a granular, they're following pretty closely.
Right.
They talked about the gag order and
Gregory,
very specific court actions.
We got to run. Love it, and it's on the Bloomberg terminal. Gregory Corte, he's Bloomberg News White House and politics reporter. Just love it.
Well, let's stay in Washington, D.C. now for a check on the latest world and national news with Nancy Lyons in the 991 Newsroom. Hey, Nance.
Thanks, Tim. President Biden will be addressing the nation from the Oval Office this evening on the wars in Israel and Ukraine. Bloomberg's Anne-Marie Hordern reports the president is expected to explain why the conflicts matter to the U.S.
What the president is going to say is really try to make sure that he is explaining his foreign policy goals and explaining the need to continue to support the national security concerns of U.S. partners directly to the American people.
Bloomberg's Anne-Marie Hordern reporting from Washington. An idea to have Congressman Patrick McHenry serve as temporary Speaker of the House for another few months has failed to garner enough support among GOP lawmakers. So, Congressman Jim Jordan says he will seek a third floor vote on his nomination to be Speaker, possibly as early as today.
I'm still running for Speaker, and I plan to go to the floor and get the votes and win this race. But I want to go talk with a few of my colleagues. Particularly, I want to talk with the 20 individuals who voted against me so that we can move forward and begin to work for the American people.
The House has been without a speaker and unable to do any business for 2 weeks. Former Trump attorney Sidney Powell has pleaded guilty to reduced charges in the Georgia election interference case. She entered the plea this morning, a day before jury selection was set to begin in her trial. Judge Scott McAfee sought clarification from Powell during today's hearing.
Do you understand the nature of the charges that have been reaccused and that you would be pleading guilty to today?
I do, sir.
And you've heard all the rights that the state has gone through that you would waive by going forward with this plea. Do you still wish to waive those rights?
I do.
Judge McAfee says Powell will serve about 6 years of probation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. And indeed, we have this hothead crossing the Bloomberg terminal. Israel's A1 rating, well, it may be cut by Moody's. Moody has warned this is happening. Now it's sort of stepping things up. It is placing Israel's A1 ratings on watch negative, from outlook stable. The initiation triggered by the unexpected and violent conflict between Israel and Hamas, and what is looking like something more prolonged, according to Moody's. Stocks overall, we did finish the session lower. Fed Chair Jay Powell's speech at the Economic Club getting a lot of attention today. The chair indicating geopolitics, including the war between Israel and Hamas, could weigh on the economy. He also said the labor market is showing inflation may be cooling.
Many indicators suggest that while conditions remain tight, the labor market is gradually cooling. Job openings have moved down well below their highs and are now only modestly above pre-pandemic levels. Quits are back to pre-pandemic levels as well, and the same is true of the wage premium earned by those who change jobs.
And Powell, in that fireside chat with our David Weston at the Economic Club of New York, also said the Fed has to let the rise in Treasury yields play out, and it's watching this situation. Well, we're watching it too, and those yields are going higher, 4.99% on the 10-year yield right now. And the Dow, it closed down about 0.8%, 251 points lower. The S&P 500 down 0.9%, 37 points lower. NASDAQ down almost 1% lower, 129 points. COMEX Gold and Spot Gold, that is, and NYMEX crude, they both finished the session higher. And HP Enterprise, we have some breaking news on that as well now. It sees 2024 adjusted earnings per share $1.82 to $2.02. The estimate was for $2.14. That's a miss, and shares are down more than 5% right now in the after hours. And guys, that's your Bloomberg Business Flash.
All right, so appreciate it. Denise Pellegrini in there for Charlie Pellet. Well, the Business Week show premiered last week, the first episode, the Genius episode. Fantastic.
It was genius.
It was genius.
It was genius.
I like what you did there. Well, each episode is inspired by Business Week articles, but the exploration is a joyous leap into a rabbit hole or many rabbit holes.
This week's show, which drops tonight at 8:30 Eastern online and then airs on Bloomberg TV at 10:30 Eastern Time, centers around risk. It features Maeve Duvally, a longtime media executive and until recently a managing director at Goldman. She's got a memoir out now about her experience coming out as transgender in one of the most high-profile financial institutions in America. Here's more from tonight's episode of the Business Week show.
When you came out, you got, I think, literal bouquets from traders at Goldman. I think you got like these very warm notes from people. I think you got phone calls. Yeah. Those were from traders, and they were not from investment bankers. And you write in the book with clarity, investment bankers were quiet. I was so surprised by that. What can you explain that? Why did that happen?
I think probably some of my relationships with investment bankers were shallower than I thought. And I think investment bankers are very good at having really expansive relationships kind of across a wide group of people. But, you know, maybe some of those relationships aren't as deep as they would appear.
I love that you're accusing investment bankers writ large of a certain kind of interpersonal shallowness.
I'm not sure I said it exactly
that is exactly as you said it. No.
Love that as well. Of course, that is our Max Abelson, excuse me. Of course, Bloomberg News, Max Abelson.
We've got a lot of good Maxes.
I know, sorry. The host of the Business Week show there with Maeve Duvally. It is the Business Week show. It's centering on risk. Max Abelson. Of course, it's Max Abelson. What a great conversation. And it's really funny to hear the reaction, or not so funny, right?
The Business Week show is still so new that I get such a kick out of hearing a little piece of conversation there with Maeve Duvally, which I love doing in person, and it's fun to listen to. And tonight's episode, it's still so new, Carol. It's only the second episode ever. I'm really hoping if you're listening or watching out there tonight, please tune in. Risk is a difficult thing to talk about, because if you take in a risk and it doesn't work out, you might not exactly want to think too hard about what went wrong.
But in so much of your life, Max, as a finance reporter, risk means something different. risk means taking a risk when it comes to an investment. It means taking a chance on something that could have high reward, but also has high risk. It's not necessarily how you approached it in this program.
That's exactly right. I mean, listen, we tried to include that because it's such an important part of what we talk about here at Bloomberg News and in Business Week. So we had a really fun interview with Jamie Rogozinski, who founded Wall Street Bets, obviously a key player in how sort of talking about taking risk in the markets was transformed, and a key player in how actual risk has changed. People did not used to go out and YOLO their life savings on options, but he was a driving force in helping to change that. And then of course, he took his own risks and ended up kind of losing. Reddit kicked him off as moderator. He sued Reddit. He lost. So the combination of taking financial risk, taking personal risk, taking professional risk, came together in a very satisfying way in this episode, I think.
It's really fascinating because you're right. Like risk in the financial community on Wall Street can bring such huge rewards. It can make your kind of legacy. I think about guests we have on, or like who made this, outrageous big bet during whether it was the financial crisis,
John Paulson, for example.
Exactly, and they live that legacy, and it brings them often tremendous wealth and success. And yet, you take the wrong bet, you take on the wrong risk, and you can be destroyed personally as well as professionally.
It's so true. It's so true. And that is one reason why I'm really excited for kind of the arc of this first season that's going to run on Thursdays for the rest of the year practically, because we've got episodes on sort of the really fun cousins and almost sort of mirror images of risk. We've got an episode coming up on ambition. We've got an episode coming up on second acts, which is another way of saying kind of basically success and failure.
Yeah.
And I find that it's been really fun as a journalist to think about kind of these first order questions, What does it mean to take risk and fail? What does it mean to take risk and succeed? And then what happens when you want to try something completely new? And what happens when it overshadows everything else you've ever done? What happens when you look back on risk and you feel like honestly kind of embarrassed by it or shame even, It's not easy to talk about these things, but it's really fun. And I feel grateful to my three guests for really being down to try to be open about it.
When they first started talking to you, okay, so we're going to do risk. And I'm just curious, like kind of one of the things we love talking about with Joel Weber, the editor of Business Week magazine, is just like, okay, so how did this story come to be? And sometimes it's something that was on his radar, sometimes it was something on the reporter's radar, but that initial germination of, okay, we're going to do an episode on risk. Curious about what you guys were thinking about.
Well, it's been a really satisfying process because I've got this wonderful team, including my producer and director, Edwina Otira, who's just a wonderful, wonderful colleague, and then Joel Weber and Kristen at the magazine, and then the folks on Bloomberg Original's side, and then people in the newsroom who are helping. What we've tried to do is stay true to what Business Week is and what Business Week stories are. So the honest answer is we went looking through the magazine thinking like, what are the themes that are kind of below the surface, that are subtext? And how do we take them from below the surface and then bring those themes into the light of day? And so we spent some time just like honestly shooting the breeze about journalism and talking about like what are the difficult and interesting and rich themes that are kind of pulsing below the surface. And that's how we landed on risk and some of these others.
There's been some really cool promos about this, and one of my favorites has been, Max, the sort of behind the scenes of the studio, where you talk about what went into building this space. And a lot of it actually has Max Abelson in it.
That is so sweet that you would say that. I mean, there are really two modes that I feel like are really fun. Right now, for people who aren't watching, we're in this like very beautiful, high-tech, like very well-lit. This is kind of what I imagine like a spaceship in, maybe 125 years will look like. And it sort of has a technological kind of pleasure of being here. Then we went kind of in the other direction and we built what feels like, I don't know, it's almost like 1978, sort of eccentric newspaper editors, like small office, and they were very generous. First of all, they carpentered the space. Essentially, I basically had nothing to do with it, you guys. But they were warmly allowed me to bring my little pieces of art. I have a little fake can of seltzer and a fake can of Celery soda, every old Jewish guy's favorite soda. I have a really oversized coin. I have a wonderful fake used handkerchief from Museum, my favorite museum. They really let me make it my own in a very moving way.
Well, and every story you do, you make your own and really just tell it in an incredible way. Max Abelson, catch the Business Week show. It is tonight at 8:30 p.m.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We're keeping a very close eye on HP Enterprise. Shares down just about 5% in extended trading. The company forecasting 2024 adjusted earnings of $1.82 to $2.02 a share. The estimate was for $2.14, so that is a earnings miss from HP Enterprise. BlackRock profit tumbling 12% on interest rates in a deal slump. We get more on what's happening there from Bloomberg's Ann Cates.
Blackstone is reporting a 12% decline in quarterly profits available to shareholders as it grapples with higher interest rates and the sting of a pullback in deal making. Distributable earnings for the third quarter totaled $1.21 billion, or 94 cents a share, missing the $1 average estimate of analysts surveyed by Bloomberg. That was roughly in line with Blackstone's second quarter profit, which was the lowest in 2 years. The firm oversees more than $1 trillion. It is the first in the coming string of major U.S. alternative asset managers to report third quarter results. Ann Cates, Bloomberg Radio.
All right, thank you, Ann. And Blackstone shares down about 8% today. And more people are prepping for flood, fire, or other urgent situations by buying supplies to get them through. Surveys and rising sales of prefabricated disaster kits indicate Americans are more likely to keep emergency supplies on hand than they were a few years ago. You know, roughly a third of those surveyed by the financial services company Finder said they spent an average of $149 on items like non-perishable food, medical supplies, and cases of water in the past year. That's up 20% from 2020. Denise Pellegrini, Bloomberg Radio.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Carol Masser and Tim Stenovec live in the Bloomberg Interactive Brokers studio in New York. Let's get a check on the latest world and national news. We've got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden will be addressing the nation tonight at 8 p.m. Wall Street time. He'll be outlining the need for U.S. support of Israel and Ukraine as they continue to fight. During a trip to Israel yesterday, Biden struck a deal with Prime Minister Benjamin Netanyahu to allow trucks loaded with humanitarian supplies to enter Gaza from Egypt. But the State Department's Matthew Miller says Israel is worried that aid could be grabbed by Hamas.
We think that's a legitimate concern. We've made clear that this aid needs to go to innocent civilians and not Hamas. We're going to be watching very carefully how it's delivered.
Miller says it's hoped they'll be able to start those deliveries as early as tomorrow. A new poll is out in the 2024 presidential race from Bloomberg News and Morning Consult. It points to a challenge ahead for President Biden in a head-to-head matchup with former President Trump. Eli Yoakley is the U.S. policy analyst at Morning Consult.
He's underwater in Arizona and in Georgia and in Wisconsin. These states were so important to his victory in 2020, and right now he's losing a lot of people there.
Morning Consult's Eli Yoakley tells Bloomberg Sound On President Biden is also underwater on most issues and is failing to inspire enthusiasm among those who've supported him in the past. Sidney Powell, the one-time attorney who helped former President Trump with legal challenges following the 2020 presidential election, has pleaded guilty in Georgia. Judge Scott McAfee asked Powell if she understood the plea deal she's entered into with prosecutors.
Are you pleading guilty today because you agree that there is a sufficient factual basis, that there are enough facts that support this plea of guilty?
I did. Powell was one of 19 defendants who faced racketeering charges in Fulton County, Georgia. And according to the plea deal, Powell agreed to testify at trial. Her trial was set to begin tomorrow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. Bureau. Carol Masser along with Tim Stenovec live here in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals. Why are you smiling?
I'm smiling because I've got a nice New York City real estate
I thought it was because you just
story.
inhaled a bag of popcorn and
I did a yogurt too.
and a cup of yogurt.
But who's keeping track of what I eat? It's a 3-hour show. We got
For those watching at YouTube, Bloomberg Originals got us like
sometimes you can
we
catch
get a
us
little
snacking.
hungry, you know. It's
how the
3
sausage
hours.
is made.
It's 3 hours.
That's how it goes. Hey, Jennifer Epstein's got a great story out about rising costs for homeowners here in New York City.
Oh, I saw this. Yeah.
Okay, so no one ever said living in New York City is cheap, but surging expenses in recent years are threatening to squeeze homeowners even more. When we say homeowners, we're talking about co-op owners and condo owners. One thing that's unique about New York is that the homeowners association fees can be incredibly high because Maybe you have a door person.
It's like another mortgage payment.
Oh,
it's cray-cray.
Absolutely.
It's cray-cray.
So these fees that are paid to